Good afternoon and welcome to the Coinbase Institutional Markets Call. It is the 30th of July, around about lunchtime, and we have got a hell of a show waiting for you today. We have a special guest. We have Jack Platts, the CEO and co-founder of Hypersphere Ventures, probably one of the best performing funds in the crypto ecosystem. We're going to be running through how he's thinking about the space right now, the political climate, ETH L1, alternative L1s, and so much more. We are then going to run through a market update with Greg. It's been a super eventful week. We've been trading higher, we've been trading lower, and he's going to run through all the reasoning around why the market is moving like that. We'll also do an ETF update around ETH and BTC. David is going to take us through the macro. There's a ton of earnings this week and also macro data. And then David Hahn is going to take us through on-chain, where we have a couple of OG DeFi protocols with some rather important news and what that means for the rest of the space. And then lastly, we're going to finish with the couple of highlights from the Q3 guide to crypto markets put together by the Davids and in partnership with Glassnode. So David, you've got the Q3 reports out. I know that every single quarter, it's always a lot of work for you guys, but you always get a ton of interesting insights out of it. So I'm sure it's worthwhile. How has this one been versus maybe some of the other quarterly reports that you put out recently?
Yeah, the guide to crypto markets is hugely popular. Among our clients, and I would say there are kind of three big takeaways this time around. Number one is that we are mid-cycle inside a bull market, and the technical charts show this. But I also think that this kind of is supported by our fundamental work as well. And we've said that even if things shop around this quarter, for example, I would still expect to be more constructive in Q4. I would also say that the ETFs have been huge. We have a lot of charts in this report about the ETFs themselves. They are our favorite product in the crypto market. You know, they hold around like 5% of the Bitcoin market cap. So I think that incorporating this into our report is really important. We also look at the on-chain activity, which has been, of course, increasing pretty rapidly. There's been a growing user base, a lot of increase in transactions. You kind of see that in stable coins, for example, where the market cap's now $164 billion. So that's something to pay attention to as well.
Amazing. Well, I look forward to diving into it in more detail. I've scanned it so far and it was great, but going to definitely make sure I can go through it with a fine-tooth comb. So without further ado, we're going to get into the call, but for those of you watching on YouTube, don't forget to scan the QR code to access the guide to the Q3 crypto markets and all of the team's fantastic research and weeklies. There really is a ton of great content there. And no matter where you're listening, YouTube, any podcasting platforms, don't forget to subscribe and of course like us if you like us, so that others can hear more about the call. But without further ado, let's get right into it. So we are super excited to have Jack Platts, co-founder of Hypersphere Ventures, here with us today. Jack, welcome to the pod.
Thanks, Ben. Thanks for having me.
Well, great to have you here. Now, a little bit of background on Hypersphere. So you've been a venture fund since 2020. You came out of the Web3 Foundation, which we'll touch upon in a second. And you've had some pretty incredible fund performance so far. So I think Fund 1, you raised 23 million and then distributed 9 times that amount, so 9 times DPI, and then your absolute fund raised 25 million and distributed 22 times, so 22 times DPI. So pretty impressive. Congrats on that side of things. But how did you get into crypto and what kind of made you start a fund?
Yeah, well, thanks for having me. So initially got into crypto right after graduating college. So I'm 30, so about seven or 8 years ago. So I went initially to work at the Web3 Foundation and in Europe between Berlin and Zug. I was early team member at Polkadot. So that was an early L1 blockchain from the 2017 ICO days. And I helped lead their marketing and business development for about 2.5 years. And then went to launch and co-found Hypersphere, which is what I currently work on. It's a digital asset manager. We run a series of venture funds as well as a liquid open-ended hedge fund. And yeah, we're still investing at the early stage, as well as in liquid markets. We have about 300 million AUM, about 10 team members, your remote first team, and that's a little bit about us.
Cool, very cool. And your time at Web3 Foundation and with Polkadot, I guess, what did you learn there that helps you prepare for launching Hypersphere?
Yeah, well, working at a layer 1 blockchain is like an MBA in crypto, as I like to call it. So you get exposure from everything from front end and wallets to things that are, as research oriented as consensus mechanisms, and how the actual blockchain produces blocks, and what the differences are between other kind of systems. So you can go as deeply technical as you'd like, or as high level, focused on go to market and token mechanics and distribution of the token as you want as well. Especially being on the early team, you kind of do everything, and then end up hiring people that kind of specialize in those specific areas. So you get a deep education, and everything crypto related is probably not that much different than working at an exchange on the crypto team, because you get exposed to such a wide breadth of projects, and it's up to you to go as deep as you'd like into any of them. And then you can take those learnings about what works for specific teams building on, an agnostic L1 blockchain, like what these applications are like, how they work, which ones and which teams make the most sense in terms of building them. And then I kind of applied that knowledge to founding Hypersphere. And we've invested in about 100 companies now over the past 4 years. So continuing to get a lot more at-bats or shots on goal to understand and develop the pattern recognition of what works.
So, Jack, there's obviously been an abundance of political discussions recently, and crypto is featured pretty prominently inside of that. It's kind of sensitive for us because we're an apolitical company, but we've always kind of approached this crypto, that is, as a bipartisan issue. And we've made no kind of surprise that we've supported pro-crypto candidates in the past. But you were recently attending an event at Mar-a-Lago, and given this political climate, I was wondering how you currently see the political landscape. How do you see it affecting crypto? Are there any particular policies or trends you think are going to have significant impact here?
Yeah, so it's definitely crypto. We want obviously to be supported in a bipartisan fashion that de-risks the election for crypto market participants, if both sides equally promote or help promote regulation that works for the industry. But realistically, there's going to be, different sides have different opinions, and the leaders in those groups have different opinions. So I thought, on May 5th, I went to this event at Mar-a-Lago. You had to buy a certain amount of NFTs to be able to attend. And so I bought the requisite amount, and then went with many other people from our industry who were in the South Florida area at the time. And I thought at the time it was the most bullish kind of political crypto event that had occurred, which was only topped by Saturday's event in Nashville, where Trump and Senator Loomis and others gave speeches about Bitcoin and about crypto legislation in the United States. So, but the May 5th was really a watershed moment in this becoming a real political issue in the general election in November in the U.S. And in that Trump came out and in no uncertain terms said he was very much pro crypto, and then you had others like Brian Selkis of formerly Masario, and others come out and kind of give speeches on it. So it potentially politicized the issue more, and that's not something we want. I mean, for example, EVs, something as simple as electric vehicles, has become a political issue where most Republicans don't see their future car ever being an EV, and most Democrats, having no problem with EVs. It doesn't make any sense because EVs are just, electric vehicles. So, but unfortunately, it looks like that's happening in crypto now. So, yeah, it'd be great to discuss ways that we can make it more bipartisan. But
yeah, so I think the big topic that a lot of people were discussing about was this idea of a Bitcoin strategic reserve. And I think there are a lot of views on both sides about how likely they would actually be. But could you talk a little bit about that? Specifically, maybe you can just talk about the differences between Senator Lummis's recommendations here in terms of buying new Bitcoin versus what Trump was saying at Bitcoin Nashville.
Yeah, so it sounds like the two speeches are similar in that they both want to designate Bitcoin as a strategic reserve asset. One of the differences on the high level is that Loomis, like you said, wants to use funds from. Initially, we thought it was potentially going to be the Federal Reserve swapping assets on its balance sheet, Treasury securities, agency securities for Bitcoin. But now it looks like it might be actually the Treasury going in and doing this, whereas this would be over 5 years and buy up to 5% or of the Bitcoin supply or 1 million units. Whereas Trump's would start out with some of the seized assets from Silk Road and Ross Ulbricht and use those 200,000 or so, I think it is, Bitcoins as a starting point to then build on. I think those are the high level ones, but correct me if I'm wrong.
No, I think you got it right. I was just kind of curious. I mean, what's your views on A, I guess the odds of this, and B, the greater implications for this for the ecosystem?
Yeah, so the odds on it are, so maybe if you take the race as a toss up, the general election at 50%, and then you say if Trump gets in and wins, there's a 20% chance. So maybe there's like a 10% chance or something. I think that's fair.
Yeah, it's definitely an interesting headline, one that I didn't necessarily think I was ever going to see, to be honest. But it's certainly positive for the space. I guess what's also interesting is, as we've said a number of times, it is a bipartisan issue, and we've now got a chance to see how the Democrats are thinking about crypto in kind of the new regime, which I'm constructive on and I'm very hopeful, and I think the technology has a huge amount of potential to do a huge amount of good for people around the world, and I think hopefully that will be seen a little more clearly. Now we have a change on the Democratic side as well. But yeah, I want to kind of move on a little bit here, just into some of the other ecosystems, the TON ecosystem specifically. I'm curious kind of how you think about that vis-a-vis Ethereum and Solana, and really, you've worked at a layer one, you've been in crypto a long time now. How do you think about those different ecosystems?
Yeah, so my career in crypto has been pretty much focused around figuring out what comes after Ethereum. I thought that was going to be, Polkadot. That's why I went and worked there. And then in 2021, started to look at these other ecosystems. And it turns out it was Solana is the answer to the question in terms of on-chain metrics, DEX, fees, MEV. Volumes on chain, a lot of these very important metrics that we in crypto measure as to the health of a layer one or of a blockchain. Solana is scoring really well on this year, and in some cases better than Ethereum, which is a multiple of its market cap and awareness as well. Globally, given it's an older blockchain. So Solana seems to be kind of the third prong on the stool for potentially institutions, where they go, right, so I'd like some Bitcoin via Bitcoin ETF and maybe some ETH as Ethereum ETF, and it seems like the third most interesting blockchain would be Solana for these kind of institutional groups. It's also a very popular trade or investment in the hedge fund community and in the venture community. So there's a robust ecosystem, of course, and in Ethereum land that's been around for a couple of years. More recently in Bitcoin with the L2s and so forth. But Solana definitely has a lot of kind of applications that have kind of reached escape velocity and gotten a bunch of users and so forth. So those are the three, I think, most robust ecosystems. And then there's kind of a longer tail and kind of a race for maybe the fourth slot, right? And Telegram Telegram was a bet we made at the end of last year after I attended the TON developer Telegram. TON stands for the Open Network. So it's the TON Developer Day in Dubai in November. We took a large position in TON as a fund, and have been looking at the ecosystem in terms of projects that we can invest in. And the idea there is really that they have this app downloaded on over 900 million users' phones, which makes it the 6th largest social media application in the world. And the first 5 social media applications can't launch a blockchain or can't launch a token either. So you have WeChat, ByteDance with TikTok, WhatsApp, Instagram, and Facebook. Obviously, the Libra project kind of died on the vine and wasn't allowed to launch because of regulatory issues in the United States. And then obviously in China has been even more harsh than the United States on crypto. So obviously there's no coins coming out of that. So Telegram's really a way to play TON token is kind of a way to play the distribution of the Telegram app, and is a bet that there will continue to be a partnership between this TON Foundation and the Telegram Inc. company in terms of integrating the blockchain further into the app, and that will continue to be allowed right on the App Store, which is a kind of a platform risk, given that Telegram operates on the iOS operating system, the Google Android Play App Store. And then really there'll be a wave of application developers coming in from WeChat or other places where they've built these mini apps, and they'll build mini apps inside the Telegram app or browser. So these could be casino games, regular tap games like Notcoin, which was really just a tap-based kind of silly game, but has, I guess, tens of millions of users, and kind of a proliferation of those types of games, given the amount of distribution. So, Telegram is a great piece of software. Everybody in the crypto industry uses it already. So those of us who are not based in the US also can now use the wallet app inside the Telegram browser to interact with meme coins. You can buy meme coins on tools like BonkBot, or you can play games or various things. So I think there'll be even more developers kind of focused on that ecosystem over time.
Yeah, that's super interesting. And I think it's really interesting that you've picked TON as kind of like the one that's contending for fourth place. And it seems like we're actually migrating away from pure decentralization into kind of a product play, where when people talk about TON, I don't really hear much discussion about huge scalability, decentralization, Nakamoto coefficients, where that was a very obvious discussion around Bitcoin into ETH, and then that's a big debate around Solana right now, how decentralized it is compared to Ethereum, and then now with Telegram, it's all about with TON, it's about the Telegram app and the distribution there. I'm kind of curious. Do you think that's a general trend that we're going to see in crypto, that we're actually moving away from the pure tech, pure decentralization into more product stuff? Do you think there's a lot of space for at the product, the infra layer? How are you kind of thinking about these shifts in the industry?
Yeah, I'd say it's not binary. I think we'll continue to have a push and pull between infrastructure and applications, where infrastructure will be able to support a next kind of crop of applications that weren't yet possible before that, and then we'll kind of go through the adoption of those applications and go, wait, right? So it's still not fast enough. It's still not cheap enough. It's still not scalable enough. And then we'll go, okay, let's focus back on the infrastructure level again. And you saw this with three of the largest kind of waves in crypto adoption since I got into investing full time in 2020, right? You had kind of DeFi and a lot of interesting experimentation, as well as a bunch of kind of froth related to that at the time with food coins and stuff during the COVID years. And then some of that stuck from that original DeFi summer, and is kind of the backbone of decentralized finance and crypto generally, with the lending protocols, DEXs and AMMs and so forth. And then there was kind of an NFT kind of craze shortly thereafter, where we went, right, these non-fungible tokens can be used in all these different areas of different industries. And there was kind of a craze and speculative interest around that and frenzy. And then some of them kind of stayed around, and others, a lot of them didn't. And now this kind of third one is kind of these meme coins, right? And those could only really exist, or as the Pump.Fund founder rightfully corrected me recently, retail coins. These retail coins can't really launch on anything else besides Solana as well. So that wouldn't have been possible maybe in the DeFi days and the NFT days, but it is now possible because we have a platform that's sufficiently decentralized, fast, cheap, et cetera, to the point where between Trump getting his ear shot on a couple of Saturdays ago, and CNN picking up the news, minutes later, there was over 1,000 retail coins launched on Pump.Fund within those intervening seconds to maybe minutes. So there's ability to move quite quickly, or more fast on Solana than we're perhaps used to before. And eventually maybe we hit a bottleneck there, and we'll be off to the races with another app or another app infrastructure play. Yeah.
That's really interesting. Talking about these layer ones and potentially hitting these bottlenecks. I know you guys are still active in investing in some early stage L1s. I'm kind of curious, how do you view these investments in their opportunity space compared to the existing progress being made by Solana or some of these other high throughput L1s, and kind of how do you view these new L1s winning new market or winning existing market share versus actually creating new products? that have not yet been created?
Yeah, I'd say the most interesting investments for us, one of our main criteria is how differentiated and how distinct a product offering is from what's been created before. So obviously, if a infrastructure layer enables behaviors that were not possible without, or weren't possible before and aren't possible without crypto, that would obviously be very interesting from an investment perspective, because you could potentially have a really big TAM and no prior comps to it. So you can really use your imagination as to, okay, what's possible with this, and only with time and developer interest would we be able to find that out. So we spend time at the infrastructure layer, and then when we invest there, we always talk to as many teams as possible. Like, for example, in the TON ecosystem, okay, what are you building? What are the trade-offs? How did you get here? And that only further validates our thesis in the L1 token. There's not been many tokens that have outperformed Bitcoin over multiple cycles. Ethereum, Solana, and like Doge are like kind of primary and really singular examples of this. So you really have to be careful before you kind of invest a ton in an ecosystem and all the applications building on it, before you know if that layer one blockchain or that ecosystem itself is sustainable and is going to continue to keep up with the pace of innovation in the space and adoption in the space more broadly. If that makes sense. Yeah.
Jack, question around just how you manage, your book and trading. Crypto is obviously incredibly fast paced. You just took us through some of the, technological changes that you keep a close eye on. But token prices are also, incredibly volatile. You've successfully managed through, 2 aggressive cycles here. How do you manage to stay agile and keep on top of deals at Hypersphere?
Yeah, well, we have a great team. There's 10 of us, and a few of us focused on the investment team that help with this. So really, we have kind of two primary products. One is venture funds, and one is an open-ended liquid hedge fund. So between those 2 products, we kind of have myself that straddles both, as well as a robust operations team that focuses on the security, finance, and operations and legal work for both. And then we have more specific investor teams for each that are, on the liquid side. It's a multi-manager primarily. So we have anywhere from 5 to 8 PMs live at a given time, and these portfolio managers are focused on their own specific trading strategies and their own specific books. And so we need to build a platform, right, that can attract those portfolio managers and then retain them with the capital we have to allocate to them, and then really even help them get access to liquidity, optimize their risk limits, and we monitor those in real time, and then obviously when we source them, make sure that they're good. And then on the venture side, it's completely different than these liquid open-ended strategies that it could be more quantitative or DeFi or so on and so forth, where you're really looking at building a team that can help founders in the earliest stage of starting their companies, go to market, raise capital, get users, and build a product that they then iterate on for years to come. So it's quite different, and that's why we have the investor teams that are specific to those funds. But there's also a lot of overlap in that these early stage projects launch their token more quickly and need help from an earlier stage in terms of going to market than maybe traditional companies.
That's really interesting. And you obviously have a view of both the venture side and the liquid side. Does one have a better opportunity set now? Because one thing we talk about on this call quite a bit is just the number of unlocks. I think there's 1.6 billion being unlocked in August, which seems to make the liquid side, very tough right now. But I'd love to get your view on that.
Yeah, I think that's spot on, Greg. And seems to be more of a bifurcated market taking place the past couple months. So what I mean by that is Bitcoin is up. I'm not sure the exact amount. Call it 50% or something. With Solana up even more this year. But the average, if you take the top 400 coins on CoinMarketCap and you look at the average performance in the first half of the year, they're down 12%. So the average coin in crypto, high value, high market cap coin is actually down this year. Whereas obviously Nvidia is up huge, S&P is up huge, crypto at large is obviously putting up great numbers. So, how's that possible? I think it's related to what you were just discussing, Greg, which is, there's a huge amount of supply unlocks, a huge amount of supply of new tokens. And there's perhaps a dearth of buyers for those. Relative to the larger coins like Bitcoin and now Ethereum that have an ETF. So it's kind of like you have an ETF, you're a more mature technology platform or coin, or you don't. And that's kind of what we're seeing in the market is that bifurcation between those who have an ETF and those that don't.
Very cool. And I guess moving to maybe more positive side of things, what are some of the things that you're most excited about? You mentioned Nvidia. There has been a bit of talk around AI x crypto. I guess which particular sectors are you looking at now, looking for opportunities in?
Yeah, that's a great question. I think a number of different areas. So we continue to be slightly more focused on the infrastructure side. That's where our roots are, and helping launch Polkadot, and now applying that to different ecosystems. So we continue to focus there. And on the liquid side with Solana and Telegram and a couple other investments, and then the more early stage side, we've done a number of, like you said, crypto AI projects was an interesting place. We invested in Jensen Seed, Virtual Seed. Recently did a project called Sentient. I've known Sandeep, Kenzie, and the kind of team that launched that project quite well for a number of years. So that was a easy check to write for us. So crypto AI has been an area of interest, and then we continue to invest in projects that are building on ecosystems where we have an interest. So we were an investor in Berachain. So we've actually invested in a number of ecosystem projects building in that on Berachain. So this can be kind of ways to, they have it's a proof of liquidity chain. So they're focused on DeFi, at least initially. So we've invested in a couple of those projects, as well as some kind of exciting consumer apps. They're launching a vape to earn application that kind of incentivizes people to quit nicotine and start kind of with more flavored kind of non-nicotine substitutes. So kind of fun consumer applications like that.
Yeah, that's really interesting. It sounds like you're making a lot of different bets in different parts of the industry. When you look at the landscape broadly, though, what do you see as the biggest challenges and also the biggest opportunities, for crypto over the next, call it, 1, 3, or even 5 years? And how important is, the regulatory and the economic climate to that view?
Yeah, it's a great question. So, I think a lot of the topics this year has been, okay, so why have retail coins, meme coins, taken off to such a degree and been such great performers, while many of the kind of favored VC-backed L1s been less of interest, or VC-backed coins generally been less of interest, while you saw outperformance of the majors like Telegram, Solana, ETH to some extent, and Bitcoin. And so there's all this chatter about why that is. So one theory which I tend to agree with is the U.S. kind of essentially banned ICOs as unregistered securities offerings. So if you look at the top 15 coins by market cap, the majority of them that aren't stable coins were ICOs initially. So obviously, Polkadot's in there, Avalanche is in there, Solana's in there, Ethereum, obviously being an early ICO, we're all in there. And that really gets distribution of a coin at at day one to people who want the coin, right? They're willing to put up money, so they clearly want it, willing to risk, put skin in the game. And then it also gets them in at a similar level to, or the same level actually as venture capitalists or quote unquote insiders. So it creates a more level playing field for the entire community to kind of take part in the ownership over blockchain network at similar times. Where basically since then, since late 2010s, you haven't been able to do an ICO. So there's been there's just kind of a few different fundraising rounds from VCs like ourselves, but really no one can get in from the community as easily until maybe the third or even fourth round of funding. Maybe the first one was at $50 million, and then the last one's at 3 billion, and then they launch the token, and okay, right now retail can join, or the average person can join. So by wanting to protect investors at the earliest stage from potential scams, we've now kind of removed or eliminated the opportunity for retail or the average non-professional VC in crypto to get access to these projects. So that feels, I think, maybe unfair to certain participants in the market, and then they simply don't participate because of that. And so where does their attention go? Okay, maybe they hold some Bitcoin or Ethereum, and then they just play with these retail meme coins as kind of more of a gambling kind of dopamine fix or something like this, where they can still make 100x. And the feedback loops have gotten just incredibly short over the past 5 years, where I went to work at Polkadot. We did ICO. Took us a couple years to build it. Then we launched it. To now, if your meme coin is going to work within like 30 minutes or a day or so. So the feedback loops have just gotten incredibly short, and I guess that's in part why people really like them. But it's not necessarily as, let's say, deliberate of a technological roadmap with these retail coins as I think many of us in the industry hope and think that is possible.
And what advice would you give to entrepreneurs looking to launch their own projects in the crypto space? Like, you've obviously invested in 100 plus companies, you've been in the business as well as investing in businesses. What are some of the pitfalls they can avoid?
Yeah, I think maybe along those lines is trying to allow for a community at the earliest stage. I think building in public is nice. Being transparent about how you're building, how you're distributing the token, if there is a token. I think those are really great ways to build the community, and you want the community to all to live beyond the original team, right? I think obviously Satoshi did this, Vitalik did this, and Anatoly and the Solana team are doing this, to where you're fostering a group of individuals that are building their own businesses, putting their treasury in the underlying token. You want to get to that. That's kind of escape velocity for a blockchain community and network, is to have a group of like-minded individuals all participating and building together. So I'd focus on community first as a primary element, and then trying to build something that's differentiated rather than something that is more like, oh, I'm taking this because everything's open source. Like, oh, I'm taking this DEX and putting it on this new blockchain that's just launched, and that's kind of the differentiating point. I would focus more on ways that the technology itself is more differentiated if I was starting a project.
It's interesting you mentioned community. That was definitely something that a lot of people have spoken about with reference to Chain, one of the projects you mentioned earlier. And then I guess if we think about social media applications, like attention or community, I guess it could almost be the same in some ways. And those that get the most attention are those that kind of keep the user, and the rest kind of follows from there. So one final question, Jack. This has been great, and would love you to stay with us if you're free for the rest of the show. But what's next for Hypersphere? And if people want to get in touch, how do they get in touch?
Yeah, absolutely. So I'm Jack B. Platts on Telegram, and then our website is hypersphere.ventures. in terms of what's next for us, we're continuing we just launched a new liquid fund in February. So we're continuing to look for portfolio managers for that. And we have, about a half dozen right now that are all operating their own strategies. And we're always recruiting for that. And then on the venture side, please get in touch if you're building a project in crypto. We'd love to hear from you. And you can reach out via Telegram or on our website. So we're going to be fundraising for a new venture fund later this year. And we'll be at a couple events in Asia in September. So if you're at South Korea Blockchain Week or Token 2049, we'll be speaking and attending those in Seoul and in Singapore in September.
Cool. Thanks very much, Jack. Enjoy your travels. And do stay with us if you're free. But thank you very much for joining.
Thanks for having me.
Greg, moving to the market movements, it's been all over the place. I feel like I was watching Bitcoin Nashville on Saturday, kind of just watching the Bitcoin price to see what was being said and how it was moving. And it's been a bit of a whirlwind. So can you run us through it?
Yeah, it's been quite a week. I was watching the Bitcoin price as well. Was a little surprised by the lack of movement. But just kind of recap where we've been and tell people where we are. The last week, really the focus has been on both Bitcoin and ETH for different reasons. Bitcoin obviously has been in the news, and we've seen buyers on the back of a major presidential candidate speaking at Bitcoin 2024 in Nashville. Additionally, we got Senator Loomis and her proposed bill to add 1 million Bitcoin to the U.S. strategic reserve, Treasury Reserve. I think it's important to just take a step back. This time last year, BlackRock had just filed for a Bitcoin ETF. Whether or not you think it's probable that Bitcoin actually gets added to our reserves here in the U.S., just the fact that we have, a major presidential candidate and a U.S. senator even talking about it, I think is extraordinary. So, we saw Bitcoin trade up to near 70,000 on the back of that news. And then, like often happens in our market, some large wallet movements took place that spooked the market a bit, which is why we're seeing some softness today. Outside of Bitcoin, ETH, has been again overshadowed by Bitcoin, but we had an ETF launch last Tuesday, so a week ago, my view is it's actually gone, very well. The net flows, which is something people focus on, they've been net outflows to the tune of about $440 million. But one thing I think is important is let's separate, the legacy product ETH from the new issuers products. And if you do that, the new issuers have garnered about almost 1.3 billion in flows. And that's just under 40% of what the Bitcoin ETF had attracted in its first 5 days. So, if we're going to use Bitcoin as an analog, to me, it looks like this ETH launch is going pretty well.
Amazing. And what is what are the derivative markets telling us? What are funding rates looking like? And are we seeing more length in ETH over BTC to kind of support some of those comments there?
So we were before these wallet movements. The derivative markets really show a pretty balanced market. We're not out over our skis like we were in March of this year. Funding rates are, high single digits, kind of around 10%, call it. So very healthy from a positioning standpoint.
Cool. And we'd love to bring DD in here, but Greg, while we've got you here, busy week from macro side of things, earnings as well. What are some of the things that you're keeping an eye on this week? Because as much as macro is not playing such a big role and maybe politics has stepped in its place for our market, more recently, it's still incredibly important. So what are some of the things, Greg, that you're keeping your focus on this week?
Yeah, so outside of crypto specific news this week, it's a big earnings week. We've seen the S&P trade down, quite a bit off its highs on predominantly tech weakness. And we have some large tech earnings this week, Microsoft being one of them. Coinbase also, we release our earnings. So, how the S&P trades can inform our market, and any bounce we see there could help us as well.
And David, on the macro side, we have got some data, and just today, David Solomon came out and said he expects 2 cuts this year. So macro is still obviously important to us. What are some of the things that you're keeping an eye on?
Yeah, I think the Fed decision is probably largely what's people are thinking about this week. And I don't think the decision there should be a surprise. I think almost everyone on the street actually expects them to keep rates unchanged. The big question, though, is will they say anything about September, where a 25 basis point cut is priced? I'll be honest, it feels kind of boring on the rates front right now. I just think that the FOMC meeting should be more of the same for this particular FOMC. We have disinflationary trend, for example, soft economic landing. We will get non-farm payrolls on Friday, but I think markets are expecting just a general slowdown to around 175,000 in July, down from 206,000 in June. We did get the JOLTS job openings data today, which came in slightly above expectations at 8.184 million. But we also saw that the number for May was revised up to 8.23 million. So that figure actually represents a slowdown in the job market. Plus, we also got the quits rate, which, for those who don't know, it measures those who actually voluntarily quit their jobs. That was actually revised down from the previous month to around 2.1, and June was flat. So I think that there are a few people who are leaving their jobs, and you can't really, glean too much into that. But the general assumption is that that's kind of negative, insofar as people aren't quite as confident about leaving their jobs to find alternative work.
So funny after a year of just focusing on macro, to hear you say macro is kind of boring right now. I'm not sure if that's a good thing or a bad thing. Just is what it is. David, I'm curious. With Nvidia, it's had a tough run, and I guess many people are talking about how Nvidia and a few other names, Microsoft, some of the hyperscalers, are really keeping the market up where we are. We're starting to see some weakness here. Does that matter to our market, do you think, or is that not so relevant? It's more of a equity story.
No, I think it is important for us. And I don't think it's super meaningful in the sense of, well, we have a correlation that we follow. We have seen that the correlation has been kind of chopping around as far as the relationship between crypto and tech stocks. But those large disappointments that we saw in the tech space last week, for example, that's put a lot of scrutiny on the earnings that we're getting this week. And, it's Microsoft, Meta, Apple, Amazon. I think that for those people who kind of treat crypto as kind of extension of the tech play, I think that does matter quite a bit. But we are seeing that, crypto rather has differentiated itself away from those tech names as well, because, Bitcoin in particular operates as a store of value. Often it's treated as a way to kind of play against concerns surrounding the traditional financial system. And if things on the fiscal side, which, I'm not going to try to bring politics into it too much, but if we are concerned about any developments happening on that side that could impact tech, I think that could actually have a supportive effect on crypto instead.
Well, a lot to keep an eye on there, and hopefully we see the supportive side naturally. Thank you, DD. DH, moving on to you for some on-chain updates.
Yeah, I think 2 big things that have been happening over the past week. The first one is Compound Finance has had some pretty wild governance activity recently. So the TLDR is that a user by the pseudonym Humpy, he made a series of proposals that essentially enabled the comp governance token to be managed by a series of Golden Boys vaults. So essentially externally managed. And he owns around, he's the largest individual shareholder of comp that we're aware of in terms of delegation. And he was able to kind of get his proposal, after failing several times, passed. I think this kind of speaks to two different things. The first one is just in general the lack of activity in terms of DAO governance. I think many years, 5-6 years ago, when DAOs first became a thing, there was a lot of talk about how everyone would be involved. I think now it's kind of come to the realization that, hey, DAOs are potentially a great tool, but the reality is not everyone has time to be actively involved in every single governance that whose tokens they hold. The second thing is that it also kind of highlights the potential value of these tokens in terms of directing treasury funds, etc. Actually, the most recent update from this saga is that the Compound team and Humpy have supposedly come to a verbal agreement where instead of going through with all these transactions, we're actually going to introduce staking for the comp token. The details are not aligned yet. The transaction for migrating the comp funds is still kind of in line. It hasn't been canceled yet. So the saga is still kind of unfolding, but really it shows that these governance tokens have real utility in terms of activist investing. So there's a possibility of taking these tokens and kind of making changes on chain with the treasury funds.
Wow, feels like a lot going on there. And there's also been stuff going on with another DeFi 1.0 large protocol. Do you mind just running us through that as well?
Yeah, so Aave has had some updates. So Compound, these proposals have been live. Aave, these discussions are currently ongoing in the forum. There's two big updates that are being discussed. The first one is a new umbrella safety module that's being proposed by BGD Labs. They want to introduce a new staking token model where essentially instead of slashing Aave, if there's any sort of bad debt across all holders, you can take your Aave and kind of delegate it to specific pools so you don't get slashed universally. Then there's a second proposal called the Aavenomics update, which is actually not to use Aave for slashing. So instead of slashing it and seizing it and selling it to kind of cover bad debt, it's to seize and then burn the debt so you don't have this market or liquidity kind of impact where you'll get worse and worse prices as you sell more and more. And so there's kind of a little bit of controversy, not controversy, but some discussion back and forth between the two. But I think the main takeaways here is that, first of all, for Aave stakers, it gives more security potentially in the future. So you're not as likely to be slashed across the board in terms of any governance failure, which, by the way, has not been needed yet. And secondly, it kind of sustains rewards to Aave stakers. So currently, if you stake Aave, you're being rewarded out of the ecosystem rewards fund. With these new umbrella safety module updates, regardless of how the final slashing mechanism works, the additional rewards will actually be increased relative to how much is staked. And so the idea is to funnel these rewards to Aave stakers so there's more sustainability when it comes to governance and staking rewards. So pretty big updates from, I would call OG DeFi protocols. I mean, for example, Compound was one of the earliest DAOs, and I believe Uniswap and some of these other major protocols forked their governance code from the Compound governance code. So pretty big updates from these DeFi dinosaurs.
Yeah. Let's go with OG DeFi. I'm not sure they're about DeFi dinosaurs, but no, I agree. They definitely have been around a long time and are still incredibly important to the ecosystem. I agree with your point around governance. It's one of those things that we wish everyone would get involved, but it's just really hard to incentivize people. Even if there's money on the line or value on the line, people don't engage in the way that the numbers that we would hope. But yeah, always a good reminder. Now, moving on to finishing up rather with the guide to crypto markets. So love to bring in DD and DH. You are obviously a part of that. I know you guys put a ton of effort into this every single year. So maybe DD, let's start with you. Like, what were some of the changes you made in this last edition? Because I know you're continually looking to improve it each and every quarter.
Yeah. So actually the Q3 Guide to Crypto Markets is fast becoming one of the most popular publications we have. And we've been adding a few things with each iteration. And this one, we've actually included charts from a lot of our clients, for example. So things that they find relevant. And if you're following along on YouTube, then you can actually see these charts. But if you're on a podcast, you can actually look at the show notes. So if you look at the first chart, for example, this is from our partners, Glassnode, and it actually shows you the MVRV ratio. And, basically this is a way to just kind of look at what the momentum is inside of the markets at the moment. I think that this is probably one of the more interesting ones because I think that there has been some modest decline very recently, but we're kind of hitting against that like threshold right now. And the easy way to kind of just think about it is it's just kind of the current market cap relative to the realized cap, or rather like what people pay to kind of get into these positions just across Bitcoin, for example. But we also have like two other charts, and there's other ones that I would love to highlight. But if you go to the next chart, we also have one from Grayscale, for example, that kind of looks into the layer 2 landscape right now. Of course, a big question that we've been kind of wrestling with, I think, as an ecosystem in Ethereum, for example, is are we going to see layer 2s being additive or disruptive to the Ethereum, for example, and ETH value itself? And I'm going to talk to David Hahn about this a little bit later in this call. But then finally, I'm just going to wrap up with another chart that we have. And I think really it kind of shows you that we are just kind of like mid-cycle here. And that's kind of the big message that I want to get across, that, if we're comparing this to some of the other major cycles in Bitcoin, we still are just kind of halfway through where we have been in the 2018, 2022 cycle, the most recent one.
That was great. Thank you for that, David. I have to say, for those that haven't reviewed these updates, I'd highly recommend checking them out. Free to download, and just tons of great content in there from the Davids and the rest of the team. So, David Hahn, would love to hear your perspective on this as well.
Yeah, definitely. I think one of the key trends, if I want to point out one from these charts, is the growth of L2. So just to double click on the chart that David Dong pulled up earlier, that was about L2 users. This one is on Ethereum and L2 transactions. So one thing that we can see is that the Ethereum mainnet number of transactions on an average daily basis has been generally flat, but the transaction volumes on L2s have exploded. Now, obviously, there are questions around how much of this has been distorted by airdrops, other activities, but regardless, it's been showing a very, very clear and sustained growth across all these L2s, even if individual L2s have certain peaks and troughs. So I think that's the main one. At the same time, however, there is a bigger question around how much L2 adoption drives value to ETH. So if we go to the next chart, it actually shows how much transaction fees have been paid in ETH across both Ethereum mainnet and L2s. And by and large, it is dominated by Ethereum mainnet fees. So the Ethereum mainnet fees consist of upwards of 80% of all transactions, of all transaction ETH that's being spent, even though L2s today have more transactions than the Ethereum mainnet. Part of this is also because of the Dencun upgrade, which lowered transaction fees. And so I think there's this big, debate within the Ethereum community right now, whether or not L2s are extractive to ETH the asset or not, in terms of the fact that, you're getting all these transactions, but for so little ETH that's being paid.
Interesting. Thank you, David. So how do you think this plays out for ETH and L2 fees going forwards?
This is a really great question. I actually think I'm a little bit on the smaller camp here, where I actually think that L2s are net additive to ETH the asset. Obviously, transaction fees have been dropping, burn has been dropping. Those are important demand drivers. I think what's more important, though, is ETH having liquidity sinks on these L2s. So, for example, if you look at Uniswap pools or Aerodrome on Base, like all these top pools are paired against ETH the asset, right? You have millions of ETH being bridged to these L2s over the last 2 years, more ETH than which was bridged over all of 2021, 2022 last cycle. I think we're about two or 3x the peak ETH that was bridged last cycle already to L2s this cycle. And so you'd have a lot more uses on ETH for ETH on these L2s. And I think transaction fees, as you get more and more throughput, fees are going to drop regardless. And I think that honing in on just like, hey, let's burn as much ETH as possible from transaction fees is not the only way to get ETH utility.
That's super interesting, and definitely some data points that we're going to need to keep an eye on as we see more evolution with ETH L1 and L2s, and also alternative L1s like Solana and Berachain and others that we mentioned on the call today. But that's a wrap for this week. Thank you all for joining. Thank you to our fantastic production team. Thank you to David, and Greg, and of course a big thank you to Jack for joining as well. We'll see you next week. Take care.